Hi, and welcome again to another edition of Market Analysis for today, Monday, the 21st of April of 2025. I'm Gio Betancourt, and this is a recording done by Vantage Markets. Today we're doing it earlier, about an hour and 45 minutes prior to the USA session open. All right, well, let's get with it. We are facing a downturn in markets. The market are showing us exhaustion, obviously, to the upside after this parabolic movement, but we already have identified the reason for that parabolic movement on April, what was that day? On April 9th. And that was basically because of some insider trading information regarding that Trump was doing something in regards to the tariffs and whatnot. But we're facing today with the dilemma that even though most likely the markets are looking to turn into a downtrend, but we are within that, the body of that day session, the body of the candle. Now the whole candle, obviously, we add the wicks, but we just want to focus on the body so far. So this could be played out as the following. Most likely, the markets will open to the downside. The psychological value of 18,000 most likely will be penetrated and surpassed. So therefore, we can actually come in and be very aggressive today and say that the market most likely will fluctuate all the way down to the open of that candle back in April 9th. Now, market could obviously, they're not gonna just fall straight away. They're obviously gonna do some retracements, continue falling. Let me get this bit more space here so we can speak about this. Anyway, so the market will fluctuate, find some sort of support, make a little rally, come back, break that support, continue moving, and something like this. Now, can we speculate that the market will find that value needed around this 18,000 marker, which is a psychological value, right? It could, and this is a place that people could perhaps find that rebound and look for previous levels of resistance, right? Or previous levels of support, that previous levels of support turn into resistances, and previous levels of resistances turn into levels of support. So 18,000 is going to be most likely surpassed because of the momentum that is picking up is quite heavy. Now, today, this week is going to be somewhat busy since we are starting off the earnings report. And today nobody's gonna really heavy hitters are gonna be reporting, but tomorrow we'll have the likes of Tesla, we'll have the likes of Lockheed Martin, to name some. Verizon also is gonna be reporting tomorrow. So we could also be analyzing the following in regards to this downturn, that obviously the market fluctuate to the upside very strongly, and since then it has just been on a downturn. It could also be taken as profit taken and repositioning for institutional traders, okay, fund managers, awaiting the earnings reports, specifically from the Magnificent Seven for the Nasdaq. So if we do come out, if they do come out showing positive results, then most likely the market will rebound and recover. But if we have bad readings, it will just add fire, right? It will just add wood to the fire. So for today, in a very speculative form, downtrend or looking to enter positions to the downside. So we're looking to sell the markets, the Nasdaq. Let me. Since we're already fluctuating below this, let me also do the following, another level. I'm gonna be using round numbers. Now, which tool can we use to come out and give us some probable levels? Well, in this case, since we are moving downwards, or anyway, we are in a trend, well, we're not going to use the trend-based fib extension, and we are going to be looking to measure at least 2 days prior, so from the high, and let's just go all the way to where we are so far right now, okay? And so we could look at it. So we want to measure this movement. How much more can it continue trending lower? Well, the Fibonacci numbers, 0.236, 0.382 is obviously one, and the golden ratio of 0.618% is where most likely the markets should come towards it. Now, this could also be another level, right? But look where I placed my support, and I'm gonna actually adjust it to that value of 0.382%, which is right here. Okay, so let's see. I'm gonna use 18,000 as a psychological level of support, and then initially the second one will be 0.382. So those are your targets for today. Initially, it could continue moving towards the golden ratio, which is the reason of using the Fibonacci series, that everything comes towards that number, towards that value. So once the market has penetrated 18,000, you can either come out of the trade, taking your profits, or if you are aggressive, you can add, depending on how many lots you already have entered the trade with, and add more to it. So as the market continues to drop, then you'll obviously obtain more profits, but also more risk. So that's that for the Nasdaq. Levels of resistance, I'm just gonna leave them as they are. 18,400 is a given, is just basically psychological values. Now let's take a look at the S&P 500. So the S&P 500 hasn't really come and touched our level of support, which I'm using a previous swing low as a support, and for both of them actually. So let's see, RSI on both cases, the Nasdaq and the S&P 500, are below the 50 marker, implying that momentum to the downside is building. So as we approach our levels of oversold territory, we have a lot of opportunities of profit. So look, the open of this candle was 5,005, so which is basically, a target where we could potentially come towards. Now, obviously, let's see what will happen basically tomorrow. Today is going to be a quiet day initially from earnings reporting anyhow. The Dow Jones also trending lower. It did open with a gap down. It hasn't been closed per se. So momentum to the downside is building up on all three fronts. So selling. Crude oil. All right, so crude oil had grabbed a bit last week. It did fluctuate above our levels of resistance. Okay, they closed it did penetrate our second 64. It quickly retreated, and it closed right below that. Now today, the market did open with a tiny gap down. Actually, it opened at 63.616, and it's looking to continue with a downward fluctuation. So I'm gonna just use 64 and a half, as my second level of resistance, and 64 as my first level of resistance. Now support, market fluctuated down towards a $62 value, which is a psychological round value, and and great support. That's why people use it. That's why traders use it. It verifies itself time after time. So we're just gonna leave the same levels here that we have for crude oil, as perhaps the market has already retraced what it wanted to retrace. Now, obviously, the market was a little bit girish because of the negotiations between the U.S. and Iran, and that perhaps they were going to be obviously affecting the supply chain of crude oil. But apparently, there are some talks between them, so things have cooled down. But why are we seeing this move to the downside? Well, basically, profit taking is the reason that after that parabolic movement on Friday, people came out and said, okay, well, let's just come in and take that out, and positivity for the asset. Now, obviously, the Trump administration wants to keep crude oil around these values. We did say that as far as crude oil goes, the production cost was about around 60 to 50 cents. So basically, that's where they are, right? So that could also be another reason that they're cashing in on that cost, so they can obviously foresight that. Now, Nat Gas. Let's take a look at Nat Gas. Nat Gas also is flattish. We have a doji, but we have been on a downtrend basically all last week. So I'm gonna actually move my support to the lower Bollinger Band, and I'm gonna leave the same levels of resistance as they are. Perhaps we could see today a rebound, but look at the space between each candle. So it did open with a gap down, implying that the market will continue to move lower, but it seems to have found a bit support around these levels, and it's flattish right now. So let's see if the market will continue with this trajectory lower towards the $3 marker, or will it just stay within, because this gap has basically been closed. So the gap has basically been closed, and it didn't continue to move higher. That's what I want you to notice, that, and actually retrace. So if you see this, sometimes, and some traders are very, very aggressive, and what they'll do is just that when you see this, they'll wait for the candle to turn red, and they'll use the same space, the same amount of volume that it was used to trade to make this low, the swing low, and that will be their target, because they'll use 10 lots, or they'll have more funds, and that'll be a nice trade. But initially, let's see if the market will rebound back up again, or will it just sink and go towards the $3 level. Right now, it's a 50-50. All right, well, gold. All right, well, gold. I did speak about gold, saying that 3,500 by June. Well, we are $100 away. We're $100 shy from it. So, hey, we are basically there. Now, is there anything that will stop this movement to the upside? Yeah, of course. I mean, as the U.S. Open and traders get online, they'll come in, and if they had, for those that are swing traders, that had positions open over the weekend, they came in and found that nice plus of profit in their accounts, they'll take some off the table. And so we could probably speculate to see some sort of retracement, okay, from these values, just healthy retracement because of the profit taken to continue its trajectory higher. Now, will this just basically drop? Well, no, I don't think it will just drop and continue. Remember that the U.S. has a very, very deep debt, and the best way to accumulate that debt is to obviously have gold and turn that gold into cash. So right now, it's looking very strong. So higher. So will we see now we're gonna be talking about, will we see gold at 4,000? Well, that could be the case. So let's see if we're gonna be able to see gold at 4,000 by June now, perhaps, or by the end of the year. Let's see what happens. But for now, being bullish with gold, with the metals indeed. Look at silver. Silver has rebounded up that 20-day moving average. The 50 is what it was sitting right below that. So 33.5 is a nice target for it. We are above the 50 marker, so implying that the momentum to the upside is building. So let's be bullish with silver as well. Copper. Look, copper is a metal that we will always need. All right. So the applications for basically for silver and copper are there. Silver is undervalued, copper is undervalued. So will we see copper trading back around $5? That will most likely be the case. We have seen in prior weeks that the copper did fluctuate towards the $4, but has rebounded from there. And we are basically in a third consecutive higher day, green day, making higher highs, higher lows. Well, so that basically is telling us that we are in an uptrend. So taking trades, specifically looking to reach that $5 by when, perhaps if this continues by the end of the week or by the end of the month. Let's see what happened. Bitcoin. Let's take a look at Bitcoin with a parabolic movement to the upside. So there is a correlation between Bitcoin and gold. Is there? A lot of people are saying there's not. There is, but obviously Trump wants Bitcoin to be some sort of asset value, and obviously he wants to turn the states into Bitcoin, the crypto hub. So move to the upside. Bids are coming in. We are retracing from that 88, the movement towards the 88,000. It didn't quite reach there, but hey, that was quite close enough. As it came as 87.73. So right now it is retracing, making a short little pullback. It could be profit taken and just just waiting to create another leg up. Then the Euro USD. Oh wow, Euro USD. I just skyrocketed. All right, cool. So dollar index must be taking a beating. All right, so 117 is a new target. 117 for the euro by Friday. 117 by the euro by Friday. Buying the euro. Take a look at the pound. The pound also is pounding its way higher. 134.5 is our first level of resistance. Our next target, 135. 135, looking for 135 on the pound, and that most likely will happen as, oh yes, it broke 98. So US dollar index broke 98, right? Looking even lower. So let's just use that swing high here from last week as a probable level of resistance. So yeah, it's looking lower. So it's been walking the lower Bollinger Band, and it has just broken out of this cover of congestion, and it's breaking out to the downside. So let's see, 97 is the target. As we hit 97, we'll most likely see the currencies higher and the metals higher. So that's it for me today. Have a great trading day, and I'll see you tomorrow.